So recent data from the Central Bank of Ireland shows that Irish households are now holding over 167 billion euro in deposit accounts with the Irish banks. And 85% of this total, or 142 billion euro, is being held in low interest bearing deposit accounts, earning little or nothing for Irish customers. What do you take from those statistics?
Yeah, quite a lot, Dan, to be honest with you. First and foremost, I think it's a clear sign that there is a lack of awareness of options from Irish savers about where and how they can place their money in other institutions outside the Irish banks. And yeah, it's kind of threefold. So first and foremost, there seems to be a real strong inertia with Irish people, savers in general, about sticking with the Irish institutions. And there seems to be a concept that your savings should be there and you should look at them and you should top them up, but they shouldn't be making interest for you. And just the fact that they're safe and there and you can check on them seems to be enough. Like going back to the lack of knowledge, I think maybe the competitors in the market potentially haven't done a good enough job in getting the message out there. And then the third thing is, I think we're obviously a nation of savers. You just gave out the statistics there. But if you look at us against our EU counterparts, when it comes to where we're putting those savings, in the EU average is 55% of household deposits are on fixed term deposits. So that means that you get a fixed interest rate for a fixed term. In Ireland, only 10% of our deposits are in fixed term accounts or up to and over 1 year maturity. And that is traditionally and historically where people can get a better return for their savings. And that maybe is also a stumbling block, either from a point of view of they don't know about these savings products, or the feeling that, oh, I need to have my money all the time. I need to be able to touch my savings because who knows, tomorrow I might wake up and my roof might have blown off. But yeah, it's just funny that the statistics there. I tend to not like to generalize whole populations because there's obviously some very savvy savers in Ireland,
Yeah.
but those stats that you called out there don't lie. We're a nation of savers, but maybe not the smartest in where to put our savings.
Like, to me, it really kind of screams opportunity cost. 142 billion quid gathering dust largely in Irish bank accounts and losing on average, 2% per annum to inflation, when there's much better alternatives elsewhere, right? Like, be it a high interest deposit account, or better yet, pension investing or index fund investing. All of these options exist, and in some capacity there is information out there about them, but for the most part it's still kind of same old, keep all the cash with the Irish banks. You mentioned inertia there, and like the education piece, like, is there anything else to it? Like, what other reasons could there be for Irish customers not being proactive despite having at least some kind of information out there about these options?
Yeah, well, I think, look, in fairness to the Department of Finance, I think they've pinpointed this as an issue, financial literacy in Ireland. And like you've said, I think people can get bamboozled when we say to them, pension products and investing and crypto and all of these things. I think it's about simplifying the message for people, that if they have money on deposit and this is any amount of people, they should be looking to have a financial plan. And I think understanding the implications of the different products that you can invest in is the key thing. Like, there's lots of information online. You could speak to a financial advisor. But I think something I sort of like to focus on sometimes, Irish people are, nearly obsessed with saving money on their car insurance, saving money on their home insurance, or, they might go to change supermarket if there's a sale on. So they love to save money and feel like they're winning. But honestly, if you're not putting your money to work, like you said, your spending power is being eaten away by inflation and other, fees and other costs and lifestyle choices. So people, not only should they look at their savings as a way for financial security and peace of mind, which is of course the key foundation for any financial plan, is peace of mind and security. But like you said, they're to a point, throwing potential money away by not investing in products that could produce a return for them.
And it's not just an opportunity cost for the customer either, right? It's an opportunity cost for the exchequer and for revenue. Revenue isn't going to collect a lot of tax off of an account that's earning no interest.
Yeah.
If that cash was invested or earning higher interest in a better account, it'd be a win-win for both the customer and the exchequer. So do you think that policymakers and revenue and government have a role to play in terms of encouraging customers to avail of higher yielding opportunities with their cash.
Absolutely. If you look at the taxation system, both on deposit interest and from investing, we're a little bit of an outlier in the European Union. There's some countries like us, but the system is set up in such a way that if a person earns €1 on deposit interest, they pay 33%, for example. There should be a more holistic approach to how we tax, because people will look at the tax of 33% on deposit interest as a penalty, for example. And I've sort of been advocating for this in the recent months, is if you look at the German model, a saver can save up to €1,000 without paying any interest on it. Okay, now that's just savings, but like you said, like if you're looking at 41% on gains made through investing, it's a huge blocker for people to go into those products. So first of all, they might be a little bit nervous because they don't know about it, and then they go, hang on a second, I'm going to earn some cash on this, and it's 41% taken away. There needs to be a more proactive and fair approach to that, I think, because it is, like you say, it's one of the factors that's having stagnant money sitting in low interest accounts. And there's been a huge campaign right across the sort of financial advice industry for government to review, particularly the tax around stuff like ETFs. I know you've done some work on that yourself, and it is a real lost opportunity because Irish households' money could be going towards investing in the Irish economy, and at the moment they're not doing that.
Yeah, and it's crazy as well when you look at policies like auto enrollment, and obviously all the marketing efforts gone into that. There's clearly a big push by government to try and ensure that people have enough money in the future to support themselves and that they're not just relying on the state pension. So, one would think that that effort would be supported by, more favorable taxation for things like investing and saving in high yield accounts. But at the moment, it just kind of doesn't seem to be coming to fruition.
Not at all. Yeah. And it's understandable why a first-time investor might be put off by the taxation system that's in place at the moment. Like I would always say, the onus is on the individual. Yes, of course, we would like to see a fairer taxation system, but the onus is on the individual in the first case to take that step to look at what's out there. And whether that is doing it yourself, if you're confident enough, or speaking to a financial planner. But once the person takes the step, it seems like a pity that they would be they'd be turned off by something like a tax rate, And I think if we really want to get there's a lot of talk about, let's get Ireland investing, let's get money out of low interest accounts. Well, yeah, that's great, and in theory that's a fantastic idea, but those people who are looking to do that need to be brought along and helped. And I think looking and reviewing the taxation system as it is in its current guise is probably the most important step that the rule makers and the authorities can make.
You mentioned at the start there just about, I suppose, the traditional players perhaps not doing enough to, I suppose, educate people on their options in terms of high interest savings accounts. But I might counter that by saying, as I see it, I think the Irish banking landscape right now isn't set up to benefit the customer to begin with. And, the reason for that, as I see it, is you have 3 banks controlling the overwhelming majority of deposits. And those banks really have no reason or need to incentivize customers with higher deposit rates, because they know that the customer isn't going to go anywhere else. If you look at traditional banking, like the reason why banks offer higher deposit rates than their banks is to try and incentivize new business. But if all that new business is just concentrated on 3 banks, it's somewhat rational from a business perspective why the deposit rates of the traditional banks is low in this country. So can the Irish banks really be blamed for keeping their deposit rates low? Or is it just business as usual and kind of a byproduct of, Ulster Bank and KBC leaving the Irish market?
Yeah, there's a couple of things that I'm certainly not here to put the foot in on the Irish banks, because, like I say, there's no institution in this country that's keeping your money hostage. And the onus is on the saver. If they're unhappy with the return they're getting on their current savings, either move it around in your own bank, if it's what you want to do, stay in deposits, or go and have a look. The options are there. Type in savings accounts Ireland into Google and you'll find the options. But the Irish banking landscape, for a number of reasons, is a relatively unique one. Like you say, around Europe, if you look at the competition for retail deposits, it's way higher than what the banks face here. So if you're in most of our other European Union members, the customers are being incentivized to move their money because the banks need the retail deposits to do their daily business. The Irish banks don't have that. But I think it's easy for us to go, oh God, yeah, my bank's not giving me a rate. Well, at the end of the day, ultimately, it's on the saver to look around for a better option.
Yeah. And it's funny because I remember, I think it was during the early stages of the pandemic, or maybe just when the ECB started increasing interest rates. I actually distinctly remember Pascal Donoghue going on record saying, you're free to leave your money on deposit in other EU countries if you can find a better rate, which is effectively what you're saying is that, no one is forcing you to keep your money with these banks. It's only our kind of sense of familiarity and I suppose our unwillingness to get outside of our comfort zone that's preventing us from moving it into a different structure.
Exactly.
So really, it is on the individual to, I suppose, get that level of comfort within themselves by self-education, but also on, bodies like the government and CCPC and all these other bodies who are responsible for educating people on their options too. And ultimately as well, if we want change at the domestic level, if we want the traditional banks to increase their rates for customers, in actual fact, one of the best things we can do is move our money out, because only when we do that will they actually be incentivized to increase rates. Yeah,
big time. And I think people need to be, I don't want to use the word selfish, but I think Pascal actually put it well in that statement that you mentioned there, where he said it's not an unpatriotic act to move your money outside of the Irish banks. Now, I don't think people are leaving their money on deposit with the Irish banks for patriotic reasons somehow, but they do need to be selfish with their money, and they need to say, yes, okay, I've been with a bank and I'm comfortable with the bank, and that's great, but you're missing the Central Bank of Ireland put it in very black and white writing at the start of this year, where they said 800 million euro was missed out on by Irish savers by not moving their money. And that is a lot of interest. So, think of it this way: you put 10,000 euro in at the start of this year, and you look at your 10,000 euro at the end of the year. In real terms, your spending power, if you took that 10,000 euro, we all know we're looking at the prices of groceries, the prices of everything under the sun is going up. Your money is not only you not earning interest, which is lovely to you're sacrificing that potential interest, you're actually losing your spending power. So people, and yes, the governmental bodies could be doing more. I think players like ourselves in the market could probably be doing more to get the message out there. But people need to look at it this way: that not only are not only are they missing it on interest, which is what you should be doing, your money is actually the value of that money is being eroded daily because the cost of living in this country and many other countries in Europe is going up so quickly.
And I think part of the reason why the conversation around inflation tends not to really resonate with people is because you can't physically see the effects of inflation on your bank account. Like, it's not like you have a real-time balance of you losing with inflation.
Future,
you do technically when you go out and you buy stuff, but it's hidden, right? So I think if people had more visibility on the actual effects of inflation over the long term on their cash and on their wealth, maybe they would be more proactive in taking these steps now. But in saying that, since the start of around 2023, I would say, there has been, a definite increase, albeit small, in the number of Irish customers who are using, non-Irish alternatives like brokerage platforms and neobanks to earn higher interest on their cash. So I suppose for those who aren't aware, clarify what Raisin does and how it differs from the likes of Trade Republic or Trading 212 in the brokerage space, and Revolut or N26 in the neobank space.
Yeah, so I'll give you the high level overview of what we're doing, particularly with the Irish focus. So we are an online savings platform, and what we are doing is you sign up with Raisin, you get a Raisin account free online. But what we're doing is opening up the European savings market to Irish savers. So I've mentioned there's a lot more competition for retail deposits in Europe than there is in Ireland. At the moment, an Irish saver has access to savings products from 29 banks across the European Economic Area through one Raisin account. The differences between ourselves and the other, you mentioned neobanks in the market, is we aren't offering sort of day-to-day banking products. You're not going to get a credit card from Raisin or a debit card or so on and so forth. What we are doing, and I think it's, deposits can be the building block of a very, very solid financial plan for anyone. And what we are doing is giving Irish savers access to better rates for their deposits. It's a specific place for savings. We have fixed term deposits ranging from 3 months to 7 years, and we also have demand deposits, so your easy access overnight accounts. And I've sometimes heard, oh, there's no competition for savers or options for savers in the Irish market. Well, with our platform, you're getting access to 29 banks, and that's increasing all the time. So by the time this goes out to the people to watch, there might be 30 banks on the platform, for example. But just to make it clear to everyone, because it's not always the easiest thing for people to understand in their mind. How it works is you get given we're a German company, you get given your own individual German IBAN. So it's from Raisin Bank based in Frankfurt. You then have a choice. You can see it on the website, a choice of the savings products from our 29 partner banks. And you would say, okay, I've got, for example, €10,000 that I want to save, and I can put it away for a year. There's a 12-month deposit that works for me. Or I want to be a regular saver, and I want to top up and withdraw whenever I want. You can have a demand deposit. And looking at the retail interest rates that people are earning, like you mentioned at the top of the interview, we definitely are offering better rates than what most people are getting at the moment.
Okay. And so then just two things there, I suppose. First, to clarify, so yeah, you said you're not a traditional bank in the sense of, payments, debit cards, all that kind of stuff. But equally though, you're not an investing platform. You don't offer access to stocks or ETFs in the same way that like a brokerage platform would. In terms of the customer journey then, what's required is you don't get paid into a Raisin account. You have to transfer money from your Irish bank account to your Raisin account, and then you use that Raisin account to access these savings accounts. Yeah. So, as an onlooker, I suppose, having watched the development of this space over the past 3 years, to me, I would say that the financial institution who offers the highest rates with the least conditions at the lowest cost will ultimately end up taking the cake. How does a company stay competitive in the space, and how do you set your offering apart from other financial institutions, be it brokers, traditional banks, or neobanks who are also trying to win over Irish customer deposits?
Yeah, well, in a word, choice is what we're offering. If you look at some of the offerings from the neobanks, they have most of them will have a savings option at the moment, but it's maybe a one account. It's a demand deposit account. It's easy access. Like I said, we have 150 different savings accounts you can choose from on the platform, and we're one of the few, if not the only, who is offering fixed term deposits. And fixed term deposit, like I said at the top, is traditionally where you can earn a better interest rate. Yes, you have to set it away for a certain time, but you're getting a guaranteed return. If you in 6 months' time, for example, you're going to get the money you signed up for. It's not going to change. So there's no variation. But with us, and I think it's an important thing to mention as well, is all of the banks that we work with are members of their national deposit guarantee scheme around Europe. So I think Irish people sometimes think that the deposit guarantee scheme here is an Irish phenomenon. It's not. It's mandated by the European Union, that any bank operating within the European Economic Area needs to be a member of their national deposit guarantee scheme. So you can save with our banks up to €100,000 per depositor per bank, and you're fully protected. What we do is like I said, 29 banks. In theory, if you're lucky enough, you could spread 2.9 million across our banks with complete peace of mind and safety. People should be, if they've got more than €100,000 with any bank, should be looking to maybe diversify that a little bit, because in a doomsday scenario, you're protected only up to 100,000. And also, just when you're talking about brokerage platforms and things, like we're offering only deposits. That's what we do. That's what we specialize in. And we are not saying that everyone should have all of their money in deposits, but deposits do make up a very, very stable building block of a financial plan. There is definitely, people should be looking to invest their money in different ways and different products. And I'm sure you'll cover them in this series. But I firmly believe that, albeit it might not be the sexiest banking product out there, deposits really are the backbone, because people through life, will always need access to cash. If they've got short-term goals, they can at least make a return on the money while they're saving for those short-term goals. And I think that's our differentiation between the other platforms would be choice in savings products, and also the fact that it's all 100% secure with deposit guarantee schemes.
Yeah, I think I'd agree. Like, looking at what you guys have built, I definitely think I would also say choice is your kind of main differentiator. I think, like, if you look at something like Trade Republic, their whole thing is they offer an instant access account that tracks the ECB rate, and that's kind of that. Whereas, you know, with you guys, you have those instant access accounts as well, but as you say, you also have that suite of fixed term accounts. So it really does appeal to a wide user. I suppose sticking on the fixed term accounts for a second, you know, just to clarify, when we say fixed term account, effectively this is money that goes into a savings account that you cannot access for the duration of the fixed term. So if you do a 4-year fixed term account on Raisin, whichever bank is offering that account, your money is going to be locked up with that bank until the end of the period. So you need to be sure that you don't require that cash before making that decision. When I was actually looking at, you know, I was comparing the rates currently on offer on these fixed term accounts on Raisin, and I was comparing them to the fixed term duration accounts on offer by the Irish banks. And I found that in every fixed rate term duration on offer by the Irish banks across all categories, be it like, you know, 6 months, 1 year, 3 year, 5 year, Raisin had an equivalent bank that was offering a higher rate. And not only that, there was actually significantly more fixed term duration types available on the platform too. So how important to your long-term success do you think is having the most competitive annual equivalent rates for Irish customers across all term durations and account types?
Look, it's lovely to be in that position to offer what are market leading rates to Irish customers. But I think, look, we're a savings marketplace. To make it clear that our partner banks set the rates. So albeit, of course, I'd love to say, yes, we're always going to have the highest rate. It's not, we don't have the discretion to say that. I think what we are offering, and, you know, obviously people will look at the rates and they'll be attracted to that. But if you look at what we're offering, is particularly on fixed term deposit accounts, we're offering terms from as little as 3 months to as long as 7 years. You know, so there's a choice for every type of saver there. Of course, the rates will attract people, as I say, and I think given the competition for retail deposits in Europe, European banks will always be offering competitive rates. You know, and we are giving people access to that. I think in terms of fixed term deposits, and maybe I'm not answering your question here, but like any financial product of any type, whether it be investing or saving, people should realize what they're getting into. So if you've got a goal you're saving for, say, you know, you're going to get married in a year, well, there's no point in putting your savings that you need for that wedding into a 3-year deposit. But what Raisin is doing for every savings milestone that you have, whether that be a shorter term, an instant, or a longer term, we have something for you. And it's all done through one very, in my opinion, easy to use online account. And we're constantly adding banks and adding products. So what I'm saying, 29 banks, 150 saving products today. We could have this conversation next year. There could be 45 banks with, you know, more intuitive. Now, we're always listening to customer feedback. Our banks are always listening to customer feedback, and they're creating, you know, better and better terms. And like recently, Banco Profilo from Italy, one of our partner banks, launched our first 3-month flex account. So it's a 3-month fixed term interest rate. So you're getting a return that you're guaranteed. But for any reason, if you want to get your money back, you can withdraw that money without sacrificing interest at any point in that 3 month. Like, that's a unique product in the Irish market. So I think, albeit rates will be, for the first time saver, will definitely be our calling card. I think once someone signs up with Raisin, gets a feel for it, our hope and what we've seen from customer behaviours, they stay with us, and they pick and choose what saving account suits them at the time. But whatever their life goals call for.
So yeah, obviously you can't control then necessarily whether or not you have the highest rate in a given category. I suppose it depends on what's happening in the Irish market, and then also what that particular bank in that particular category is offering at the time. What does that screening process look like for adding new banks to the platform? Like, do your partners have to meet certain criteria? Is there a due diligence process that you guys have to satisfy yourself with in terms of the financial institution itself and their management and how they're ran? What does that look like?
Yeah, of course. Look, at a bare minimum, the banks have to be a fully registered bank in their country of operation. So like I said, we've got 29 banks from 13 countries around Europe. They also have to be passported, which is a way of saying that they need to be their central bank. So for example, the Central Bank of Germany, the Bundesbank, has to alert the Central Bank of Ireland that this bank is planning to collect deposits in Ireland, which means all of our banks can be found on the Central Bank of Ireland register as well. But we have a very intense onboarding process that our onboarding team do. We only work with reputable banks that meet all of our own requirements and the requirements of the European Central Bank and their own central bank. And most importantly, like I said, they have to be a member of their National Deposit Guarantee Scheme. Whether that be the German, Spanish, Swedish, Lithuanian, Irish, they have to be a member of that and fully registered.
I think one of the most important lessons that people have kind of learned as, you know, more players have kind of come into the market offering higher rates is that rate isn't everything. You know, it's not necessarily whoever offers the highest rate is the best account for you. I think the best example of that is the impact that minimum and maximum deposit amounts have on the suitability of, you know, an account to a particular person. You know, if you have, you know, a very low maximum deposit amount, that can be quite restrictive. So you could have a really high rate, but you can't really take full advantage of it because you're very limited in what you can actually deposit per month. And on the other end of the scale, you could have a very high minimum deposit amount where it's not very accessible for the average person. So how important for you guys is striking that balance between having really accessible accounts with really low minimum deposits, but then potentially also attracting institutions who might offer really competitive rates, but they might have a bit more of a higher minimum deposit that you need to get into?
Yeah, we pride ourselves on having something for everyone. You know, so every saver's goal should be met on the platform. And what we do is we make it all very clear and easy to find that information. So we have on our website, on our homepage, you don't have to be a customer to see this. It's all available on our public our homepage. We have a table of all of our savings products, and a customer can filter by term, minimum amount, country they want to save with, country ratings, or the credit rating for a country. So say you are someone who has 50,000 euros sitting in a bank and you want to invest it. You can very easily go onto the Raisin website and say, I want to save 50,000 euro. I think I don't need that money for 2 years. Obviously, that's the decision that the customer needs to make. And I want to save with a bank in Europe. We'll give you all those options. Once again, you don't have to be a Raisin customer to look at that. And I do think we don't have any, we don't push a customer to any one bank. You know, we're not saying this is the bank for you. It's a customer-led thing. And each bank has their own minimum deposit amount. It starts from as little as €1 with our overnight accounts, the easy access ones. Some of them may have a 20,000 euro, for example, minimum deposit for a fixed term. Once again, all very easily available to find. But yeah, I don't want to sound like a broken record, but I think the idea of a savings platform and saving with a savings platform is choice and something for everyone. And we don't have any sort of strings attached offers that sort of, you know, you might be, you get this here, but actually this happens. It's all very customer focused and very straightforward.
Yeah. I think let's talk a bit more about the customer for a second, in the sense that, you know, when generally speaking, when it comes to high interest savings accounts, my stance is that they're not best suited to those who are looking for long-term wealth generating opportunities, simply because, you know, cash returns historically after taxes and inflation have drastically underperformed the returns offered by equity investing. And if we agree on that, which you may or may not, who do you think Raisin is for? In other words, you know, who is the ideal customer and what are their objectives?
Yeah, well, first and foremost, I think questions like this, I always open with the caveat that every single person's financial needs and plans are different, okay? Two things to consider are how the understanding of the product you're getting into, especially if you're doing it alone, is understanding the implications of investing or saving in any specific product. You need to do your homework. And also, you know, peace of mind. There's a lot of very conservative savers and investors in this country, like there is right across the world, who have different risk appetites. And I agree with you wholeheartedly. I think people who have a long-term wealth building goal in mind should definitely look to the equity markets and look at those products. Of course, speak to a financial planner, do your homework. But for a Raisin customer is someone who has money on deposit, money that they have built up, whether they see it as their nest egg, their emergency fund, whether they are conservative to the point where they don't feel comfortable investing in stocks and shares, for example. then Raisin is for them. It's a safe place. Like I said, deposits are what many would claim, would say, not, they might be a bland financial product. We're not, it's not the most exotic thing in the world, but it's a safe place for your money to, at a very minimum, at least match inflation and keep your spending power intact. If you're asking me the ideal customer, I think the ideal customer is anyone who's got money on deposit. I don't think, once again, going back on it, please tell me if I'm repeating myself, but there is something for everyone on the platform. And I will always say, I'm a very big advocate for that. Deposits do make up a real key part of a solid financial plan, because people who have short-term goals, whether it be sending your child to university, whether it be getting married, whether it be you're approaching retirement and you've just drawn down your lump sum from your pension and you want to live off that, for example, for a time. But saving and fixed term deposits in particular offer you that peace of mind of security, fixed return, and knowing that your money will be available when you want it. So when I say when you want it, you're the person who signed up for the 2-year deposit, for example. So yeah, Raisin savings. If you're someone building wealth, like you mentioned, you're not going to build a lifetime wealth by just saving your money. Of course, you should look to different financial tools for that. But for every single person on the planet, I think having money to hand for short-term goals is a vital part of your financial plan.
Yeah. And I think one aspect that might scare people is, the idea of not being able to access that cash. Now, obviously, you don't have to go down that route. You don't have to get a fixed term account. You can do a demand account as well.
Mm-hmm.
But I think, understanding things like, if you're saving for a house deposit, if you're saving for a wedding, sending a child to university in the future, there definitely are excess cash amounts in all of our bank accounts at some point in our lives that probably end up sitting in a low interest account for longer than it should be. And I think it's about being proactive in the sense of, having visibility over that and understanding that and moving it into one of these alternatives as quick as we can. That to me sounds like the winning formula, rather than thinking that, it's a case that, all your money is going to be locked up and you can't access it.
Exactly,
it's all or nothing.
Yeah.
You can just take a portion that you think is a conservative estimation of what you might not need and try to earn a little bit of extra interest on it.
Exactly. And people can do this test themselves. They can put their money in what we call it the easy access demand deposit for 6 months, for example. And then they can, after 6 months, say they are a little bit nervous about locking their money away. After that 6 months, they should go, did I actually touch that money? I topped it up, but did I withdraw any? And if not, then you should look and go, if I had taken the fixed term, not only would I have earned a guaranteed rate, the rate doesn't drop, whereas with an easy access it can. It all goes back to peace of mind, of course, Dan. We don't want to be encouraging people to take on fixed terms of risks, or not risks, sorry, but of terms that they're not comfortable with. But we sort of advocate something called a deposit ladder, where we encourage savers to think about using their lumps, whatever they have on deposit, and putting it in different terms. So you have your easy access for your emergencies that you need tomorrow. You have then, okay, I'll put a portion of it in 6 months, and in 6 months that money comes back to me. I have a smaller portion, for example, that I can invest for 2 years. So you're spreading the deposit over different terms as opposed to having it all in one account. And that's the beauty of Raisin, because you can do that. You can go, all right, I have 10,000 here, 20,000 here, 30,000 here, if people are in that financial position, of course. So yeah, just considering what you're comfortable with, but also considering, like you mentioned at the top, the opportunity cost of not having this conversation with yourself. And sorry, I'm maybe going off on a bit of a tangent, but if I told you, say you fill up your car at the same forecourt every day, every week beside your house, if I told you, oh, by the way, 10 kilometers down the road, your man is giving it to you for 5 cents cheaper, I'd be fully sure you'd probably drive the extra 10K. But if I'm speaking to someone with a huge amount of deposit earning no interest, there just seems to be a little bit of a gap there with people's thought process that their savings should be earning something, And I think at a very minimum, just every 6 months, have that conversation with yourself and see, did I miss out on potentially, 250 quid towards my next holiday by not making the decision to move my money?
Yeah, I just think it's that, I don't know if it's an educational gap or it's just a societal and cultural thing, but we're still very much in our infancy when it comes to having these conversations about, optimizing our financial situations. And really starting to care about optimizing. I feel like, you know, it's nearly a battle trying to tell people about this stuff a lot of the time. Whereas if you look at a lot of other markets like the States and even the UK, they're a bit more ahead in terms of, you know, how they interact and think about their money. And like the day will come here. It's just, to me, it's actually really exciting because, you know, you're kind of at the ground level and you get to watch all of this develop over the next 5, 10, 20 years. But I suppose for those, I mean, you mentioned the deposit ladder and behavioral ways to interact with the platform. For the Irish customers who are using the platform now, you know, how are they interacting with it and what kind of behaviors are they exhibiting?
Yeah. So what we offer is our website, our desktop login, or an app. We're actually starting to see a huge portion of our Irish customers favor the app, which isn't, I think, correct me if I'm wrong, we're the third, as a per capita, third biggest users of apps in the European Union after the Netherlands and Finland, I believe. So Irish people definitely favouring the app. I think just before I go into their saving behaviours, I think a lot of Irish people would be, and we didn't mention this, I didn't mention this at the top of the call as a reason why maybe people aren't moving their money, but there is trepidation in terms of moving their money. And what we've learned along growing the Irish platform is customer service is the key, you know, and we have now a fully fledged Irish customer service phone line that they can call Monday to Friday. You can email us. We have a dedicated Irish customer service team. So just if that is something that people are a little bit weary of, there is support there. In terms of what our Irish customers are doing, watching the development of people's, and I'm not going to go into, you know, 10% are saving this way, but watching the development of people who maybe will dip their toe in the first instance and open a demand deposit account, one of the easy access ones that you can top up and withdraw, and seeing them sort of go, okay, we're comfortable with the platform now. We appreciate that it's secure with the deposit guarantee scheme. We have customer service if we need it. And then we're starting to see them invest into the fixed term deposits, for example, which, going back to what I mentioned earlier, only 10% of deposits are, or 10% of depositors in Ireland are doing currently with the Irish banks. So yeah, we pride ourselves on being easy to use, giving support to the customers when they need it. And it's been cool to see, you know, the sort of progression of the different products that maybe people wouldn't have done before they'd opened their Raisin account.
Like, I know for, you know, investment accounts and more traditional brokerage platforms, what I see a lot of the time is, you know, people will set up a brokerage account with whoever it is, and, you know, they'll take their first like 10 quid and they'll deposit it, and then they'll whack it into an ETF, and they'll just kind of sit there and look at it and just see how it moves and like kind of get used to the feeling of like seeing it be green and seeing it be red, and, you know, understanding unrealized gains and all that kind of thing. You know, is that a similar thing with your platform in the sense that, you know, are people depositing, closing the laptop and walking away, or are they opening up the app all the time to like check on, you know, how things are going, or just to make sure that their money is still there? Because, you know, there's those like trust issues that people have, and
especially for first time users, it's human nature to, you know, to go in and constantly, like, you don't jump straight into the deep end of a swimming pool. You ease your way in. I think, yeah, there's definitely, you can see people like to check in on their savings. You know, they're logging in to see how their fixed term deposits progressing in terms of, I've got 3 months left in that, or, I've earned quarterly interest on my demand deposit of X amount. And the app makes it very easy. Like we recently went through a redesign of the app and the website. So we're definitely happy with how it looks. But then there will also, of course, there'll be customers who are very financially confident who will open a 3-year term deposit account and might not log in again until that's matured. You know, so there's just different horses for different courses, I suppose. But we try to make it as easily accessible as people can. So if there is someone who is weary, like I said, you can open a €1 demand deposit account and you can test the waters ever so slightly, get comfortable with it, and then decide whether to progress more.
Yeah. I think one question that comes to mind, you know, when we talk about like the extent of the choice that exists on the platform, you know, like if you go onto the platform and you filter by, you know, 5-year term accounts, you're probably going to get a ton of different options from the 29 different providers. Is it a case that people are just going with whoever has the highest AER at the time that they look, or are you guys seeing people actively consider other factors like, you know, minimum and maximum deposit amounts, whether or not there's withholding tax, things like that? Or is it literally a tendency to just be like, oh, this is the highest AER in this term, I'm going for that?
Look, naturally, the highest rate on the platform for a given term will attract probably the most inflows or orders, but absolutely, their people are definitely doing their research of what they're comfortable with, what country they're saving in, whether they want to save with a bank in France or Luxembourg or Italy, whether they want to save. You mentioned withholding tax, and I think that's something that we do need to make very clear to people who are thinking about Raisin, is that if you save with a bank outside of Europe, there's two scenarios. You either get paid your interest gross, which means you get all of your interest into your Raisin account, or in certain cases, the bank will take local withholding tax to a certain degree. That's once again all information that can be found on the website. But people will then need to make a self-declaration of interest to Irish revenue. So if you earn deposit interest in 2025, that needs to be reported to revenue by October 2026 in your 2026 tax return. So these are things that people need to take into consideration. I would really not encourage people to not allow them to be a blocker, because there is some fantastic content out there on how to do that. There's obviously people with doubts should speak to a tax advisor, but our revenue have put out some really handy guides on how to do deposit interest. I know you took a look at that recently. But yeah, sorry, to go back to your question. No, you can definitely see people are using the search tools on the platform to find the bank and the product and the term that works for them. So it's not just ABC Bank offers 1% better, I'm going to save with them. There is implications that people are considering.
We already touched on the deposit guarantee scheme, but I suppose just to fully clarify, I think for any Irish customer who's looking at this, or is coming across Raisin, or literally any of the new kind of financial innovation platforms that are coming into Ireland, everyone is just asking, is this safe? Am I going to get scammed? What's the catch? And I think it's because, of our history, obviously, as a country in the financial crisis, and there's obviously an element of distrust that has entered into our society, but also there's a lot of mobile scams out there these days, and people are becoming more cautious about or believing things online and engaging with it. Raisin, as you say, is authorized by the Federal Financial Supervisory Authority in Germany, BaFin, and is regulated by the Central Bank of Ireland for conduct of business rules here. I suppose just in kind of plain English, what does that mean for Irish users in terms of safety and how they should feel about using your platform?
Yeah, well, look, I think this is obviously any financial product that someone's opening, scams should be front and center of people's minds when they're considering it. In terms of Raisin, I will go back to the fact that we are fully regulated Raisin Bank in Frankfurt. Our head office is based in Berlin, but our banking operation is in Frankfurt. Like you said, BaFin regulated, and on the Irish Central Bank of Ireland register, you get given a Raisin Bank IBAN dedicated for you. It's a private IBAN that you use. So any money that goes from Irish bank, so AIB, Bank of Ireland, that you have your money with, you move to Raisin. The money in your Raisin account is also protected by the German deposit guarantee scheme. So there's no sort of risk of transit that that money is unprotected at any time. And then when you move it on to our partner banks, if you decide to do that, they're then protected by whatever country you decide to save in, that deposit guarantee scheme. I will go back to customer service again. I think for peace of mind, it's huge. One thing I would definitely point out to people, not only in Raisin, but in finance, if there's an interest rate that looks too good to be true on social media, it's more than likely too good to be true. If someone contacts you, whether by text or email or phone call, and says, hey, Dan, we've found the term deposit that works for you, send 30,000 to this IBAN today, you really need to be very careful with that. And I would always encourage people to, if you do get any unsolicited communication, either ignore it. From Raisin, I'm talking about, ignore it. Or if you have doubts, go to our website and get the phone number from the website. Don't take the phone number from the phone number provided to you by this unsolicited contact, and call our customer service team and say, hey, look, I've gotten an email from so-and-so saying, because we don't do that. We don't get into the world of suggesting accounts for people, But yeah, look, we are fully regulated. People can find us on the Central Bank of Ireland register. They can find us on the BaFin register if they so wish, and we are members of the German Deposit Guarantee Scheme. And like I said, all of our partner banks likewise are fully regulated. You can find any of our partner banks are on the Central Bank register as well.
Yeah.
To collect deposits.
Yeah, I think on that point of customer support, for me anyway, one of the reasons why people are hesitant to engage with alternatives to the Irish banks is that they're not used to this idea of financial institutions not having a very substantial physical presence in the country, and like, you know, the days of going into branches are kind of gone. So you're still going to be picking up the phone and ringing, you know, customer support with the Irish banks if you are, but there seems to be just a greater sense of comfort that those customer support networks will actually work. And there have absolutely been, you know, some horror stories, but like there are stories online of people who have had issues with financial institutions, European financial institutions who are operating here, in terms of like, you know, deposits getting held up or lost for a couple of weeks and confusion over when they're going to get it back and all that kind of thing. You know, what sets a good customer support standard in your mind for your platform, and what are the kind of, I suppose, assurances that you're looking to give your customers when they pick up the phone or they email you?
Yeah, well, ultimately, what we pride ourselves on, the gold standard, is that the platform works as advertised. So you're saying about when I open a deposit with Bank ABC and it's maturing in 6 months, that on the day that my deposit is due to mature, that I'm made aware that that's happening, or made aware months in advance that it's about to mature, and then also that my money arrives on time and I'm not having to pick up the phone. But of course, there's instances whether people don't, you know, need some reassurance, whether something has gone wrong, that we pride ourselves on being customer centered. We appreciate 100% that it can be daunting to move your money out of your home bank into a European institution. So we really try, not only with the phone line, but, you know, to make it as user friendly as possible, the website and the app. We've got lots of material on the website of, you know, that hopefully put people's mind at ease. But when someone does call us with an issue, you know, we try our damnedest to get it sorted. Like, one thing that people should keep in mind with Raisin is that you might open an account with a partner bank in Europe, but if something goes wrong in your mind, something you're not happy with, you don't have to call a Portuguese bank or a Swedish bank. You call Raisin. You're going to get English speaking customer service. With, you know, we don't charge any fees, so it's free of charge. English speaking customer service. We will communicate with the bank on your behalf. All comes through Raisin. You're not going to be getting, you know, documents in different languages and things. Everything is centralized through Raisin. There's lots of stuff that customers can do themselves. They can download account statements now in an instant whenever they want. But I think we have to be, you know, we're encouraging people to look around for better savings options. The onus is on us then to provide a very good customer journey. I think we have been doing that to date. We're constantly reviewing customer feedback to see how we can get better. But yeah, like I said, it should work in the first instance, and then the backup is that we do have a pretty good customer service setup.
You mentioned fees there, and I think, you know, without a doubt, one of the more attractive aspects of the platform is that it is free and actually free, like no fees, charges, subscription costs. But that said, there is absolutely no other nation in the world that questions the legitimacy of something being free more than Irish people. So you might just explain how Raisin is able to provide its offering to customers at no cost, and whether the ambition is for it to remain free for the foreseeable future.
Yeah, absolutely. Well, yeah, just to clarify, we are free. There's no fees to sign up. There's no transaction fees. There's no customer account management fees. That's all covered. How Raisin, the business model is, so what we are doing is we are giving European banks access to a deposit market that they would have had to invest a lot of money into to get to, which would have been, in our case, is the Irish market. So we're giving, at the moment, 29 banks access to retail deposits from Ireland. The banks pay us for that privilege. Now, that isn't at a sacrifice of a customer interest. We earn a fee from our partner banks, but the customer still gets the advertised rate. It's not like we take that fee off the customer. So that's the business model. That's how it works, to be very open and transparent about it. And no, to answer your question, there is no plans to change that. We don't have any plans to bring in a subscription model or anything like that. So if you, like I said, you log into our raisin.com Irish website, you can see all the offers. The offers are there for everyone. Once of course they have the minimum deposit amounts and so on and so forth. But there's no sort of like, oh, here, pay us a fee and you can get these extra rates. What is publicly advertised is available to all Raisin users.
The other thing you always hear is if the product is free, you're the product. I don't know if there's any customer data being transferred or anything like that.
No, absolutely not. Like we're a financial institution. We aren't a marketing company. Yeah. We are very, very, by regulation, but also by wanting to do the right thing by our customers. We're aware that what is it's a big step in someone's financial journey to share, to move money. So no, data privacy, anything under that umbrella is extremely important to us.
I think one of the biggest challenges that you'll probably come up against, convincing people to move over, and maybe it's a reason for a lot of the reservations that people have had so far of using not only your platform but any of the other institutions who are offering products here, is the perceived complexity around tax compared to using traditional options. Obviously, because we're talking about a deposit product here, we're talking about deposit interest retention tax. And I suppose, like, just to clarify, very high level, how deposit interest retention tax, or DIRT, on Raisin deposits works versus, say, the Irish banks.
The best named tax in the world, DIRT. I love it. Yeah, so if you're saving with an Irish institution, in most cases, pretty much all cases, you will earn your interest less 33% DIRT, which the bank will withhold at source, withholding tax it's known as, and will pass the revenue on your behalf. So you will earn your €100 minus €33, you get €66. Happy days. Now, there is exceptions to that. There's people who will have to do a self-declaration for more, depending on how much they earn. There are also people who are exempt from DIRT. For the purpose of this conversation, we'll focus on the implications of saving in Europe. So there's two scenarios. I touched on it earlier, but I'll go into a bit more detail. If you save through Raisin with a bank, for example, in France, Sweden, Norway, Germany, so on and so forth, once again, these are labeled on our website as no withholding tax. Those countries will not withhold any tax. So German tax, for example, to an Irish saver. So non-resident doesn't pay any tax in that country. Raisin will then, or the bank will then give you your deposit interest to your Raisin account gross. So €100 is €100. That sounds great, perfect. But there is an obligation on that saver then to, like I mentioned earlier, to declare that to revenue. So if you're someone who's a PAYE employee, for example, whose tax affairs has always been managed by their employer, that might sound daunting to you. But I from personal experience and from being very, into this to try and figure out the implications for our customers, I can guarantee to people it is and I have to take my hat off the revenue here. They've made it quite straightforward compared to a lot of other European countries, I can tell you, to declare that interest. And there's some very helpful guides. They produced a guide in June of this year, which breaks down step by step not only the implications, but how to actually go to the My Account service on revenue and declare that. But people should keep that in mind. If you earn the interest through Raisin, you're obliged to make that tax return yourself. The second case is where certain countries, so countries like Latvia, Portugal, Lithuania, where they will, even if you're a non-resident, they will withhold a certain portion of tax. Okay, so for example, I'll use Latvia as my example here. A Latvian bank will charge an Irish saver 10% withholding tax, so they'll take a tenner off your €100. Due to the fact that all of the countries that our partner banks are based in, they have double taxation agreements in place with Ireland. So you can then offset that against your 33%, which means you say, and once again, it's all called out in these documents produced by Revenue. You can say, I paid my 10% in Latvia at source. I now only owe Revenue, for example, 23%. So that has to be done. So there's a little bit of paperwork you'll see on our website. Like I said, no withholding tax means it's very straightforward. You get gross. Anything else, you need to read through the product information sheet. And I would just say, as a disclaimer, Raisin, we don't get involved in sort of specific tax advice. We would, we will provide the foreign forms to reduce withholding tax in certain cases. Of course, we will. But tax declarations are on the customer. And if anyone's in doubt, then of course consult a tax advisor, or like I said, look at the revenue information pages on their website. They're very helpful.
Yeah, I think there's a couple of things. I mean, I'm having a lot of conversations about the whole European tax declaration thing with a lot of different people. I think the first thing to be very crystal clear on is that DIRT, deposit interest retention tax, and withholding tax are two completely different things. I think the confusion is that DIRT is technically a type of withholding tax because when you have deposits with the Irish banks, they withhold that tax on your behalf. But the withholding tax that you're referring to is the withholding tax that's levied by the banks in European countries. So just because you pay, if you happen to have tax withheld by those institutions, that doesn't mean that you have no Irish tax liability. Your DIRT is also calculated based on that. And as you said, your DIRT is calculated first gross, And then if you do have withholding tax paid, that is allowed as a credit. One thing that I found out recently that was very interesting was, and not to overcomplicate it, because again, all this information is in the documents that you kind of referred to. But if you, like, let's say, for example, you deposit with a Latvian bank, to use your example, that withholds tax of 15%, because that 15% is in excess of the 10% that's under the double taxation agreement. Revenue will actually only permit the 10% as a deduction, and you actually have to go to the Latvian tax authorities for the 5%, which, let's be honest, nobody is going to do. So I suppose that kind of falls into my next question, which is, you know, I mean, it's a tricky problem to solve, but for me, if I was using the platform, I would nearly always just be sticking to the accounts that offer no withholding tax, because you know, it saves on that paperwork. It reduces the likelihood that, you know, I'm going to make an error in my tax return, because, you know, you're dealing with additional credits and declarations. How do you view that as a potential blocker to growth and like an adoption, a blocker to adoption of some of those accounts that do levy withholding tax? And would it incentivize you to, in the future, maybe roll out, I don't know, tax calculators or additional tools that can help people figure out, you know, where there is withholding tax involved, how it operates, and, you know, how they can potentially reclaim credits, or if they have to go to foreign tax authorities, how to do that?
Yeah, a couple of things on that. So in the case of the Latvian bank there, yes, if you do not submit the required paperwork to the Latvian bank in time, then they will charge 15 and you can only offset 10. Now, just to make that very clear, when you open an account through Raisin with a Latvian bank, we provide you with a pre-populated version of that document that's required. What you need to do in the case of the Latvian banks, and we're being very specific to the Latvian banks here, is you need to send that to be stamped by Irish Revenue, to prove that you're an Irish citizen. The second thing on that point is recently announced by the European Central Bank is that there will be it's going to be 5 years, well, 4.5 years now. Eventually there will be on e-tax certificates for every EU national, which means the paperwork burden will become less. So you're asking about innovation in that space. But absolutely, like, we have a lot of information in our frequently asked questions section about, you know, the implications of taxation of saving in every one of the countries where we offer savings products through Raisin for Irish customers. So we do have a lot of it there. Your question about innovation and what we're planning, we are constantly listening to customer feedback, and if there's ways that we can help improve the process, you can be damn sure we will. But it's about finding the right way to do that, because ultimately, once someone finishes with Raisin, the tax, the onus is on them to declare that tax. But we'll do anything we can to help in the process without getting involved in specific tax advice. And then you're saying, do people favor the non-withholding tax over the withholding tax? There's definitely behavior that we see like that, but also there's people who probably maybe are comfortable doing tax returns or have a tax advisor, for example, who wouldn't be put off by the fact that there's a couple of forms to be filled out, I think.
Or they aren't aware.
Yeah, well, perhaps.
That's the other part of it.
We do try to make it, to make it as vocal as we possibly can to do that. And we've learned from that in the past too, that maybe we had to make it a bit more vocal, which we have. But that was, once again, it comes down to a customer's level of, I think when people hear paperwork and forms, it gets very like, oh, I don't know, I don't want to talk to you anymore. And obviously I'm going to say this because I'm in it every day, but it is pretty straightforward, you know? But like you say, if someone really doesn't want any of that, then we do have options where you can pay no withholding tax abroad.
Yeah, no, it's really just part of that whole movement of just trying to, I think we have to, as commentators, you have to kind of own up to the fact that you can't say it's no hassle, because it is a little bit of hassle, and you have to be open to that. But also, like, having the resources and the tools there for people to get over the line is important. Other things just to highlight as well, you know, if you're someone who has unearned income over $5,000, which is like rental investment income or other deposit income, PRSI could also be liable on your deposit interest. And then also for your users who are over the age of 65, just be aware of the dirt exemptions that could apply too, because that could be beneficial from a monetary perspective. So just on the customer experience side of things again, you know, what are some of the ways that the offering has been developed and optimized, you know, with the customer's end experience in mind?
Yeah, well, look, so I've been with Raisin since 2023. I've been a spectator and a contributor to hopefully improving this customer journey. And we recently went through a very significant overhaul of our customer dashboard area to make things a lot more clearer, to make the journey of ordering products a lot simpler. And I will say, and of course, for a first-time user, it might be daunting, but it's a pretty simple process to become accustomed to if you use it, and you can test it as much as you want. I don't want to go back to this point the whole time, but rolling out a Monday to Friday customer care line has been that was really with customers in mind, because of course like I mentioned, we're acutely aware that it can be daunting. And we actually only launched the app in Ireland last year, so that was a huge benefit for our customers, because like I said, we like to use apps in this country. And then innovations in different terms, like we realized that maybe not everyone wanted to put their money away for a 1-year term deposit, so we worked with our partner banks to really give Irish people more choice in shorter fixed terms, which I don't think there's enough of in this country. It seems to start at 1 year up to 5 years, whereas we're offering 3, 6, 9 months, 18 months, so that flexibility. I mentioned earlier, we rolled out now where people can download individual savings accounts. We always gave people an annual statement of account with all of the information of their savings, but now people can download individual savings account statements whenever they want, which is obviously important for people who are maybe going for products like mortgages and things like that they have a statement of account ready when they need it. And yeah, there's quite a bit already, but I do also think that, just like if you think about it, we had probably this time last year or even 2 years ago, we had 9 banks on the platform. Now we have 29. So it's choice for Irish savers.
And just talk to me about the sign up process. How seamless is that? How quick is it in terms of like topping up the account? How long does it take for the business days for transferring funds and withdrawing funds, things like that?
Yeah, well, first and foremost, we are a financial institution, so there is a know your customer process that we need to abide by. So there is a registration process where you sign up and give you, of course, your personal information, your name, address, contact number. We need your PPSN number to make it clear. There's a common reporting standard around European banks of interest earned. So Irish Revenue can get a report that an Irish saver saved with a European bank. So your PPS number is required at sign up.
No getting away from it.
Exactly. Yeah, exactly. After you do that, you have to go through our anti-money laundering process, which to people is just to make sure you are who you say you are. We're not accusing people of anything. But so what you do is you have 2 choices. You can use with our app, you can use our self-identification, where I'm sure people have done it for other services. You take a picture of your passport, you take a couple of selfies, and then you do a test transfer from your bank account to your Raisin account, to the service provider of 10 cents to make sure that your bank account is in your name too. That's a very important part of it, because that means that prevents people from getting on the platform that shouldn't be getting on the platform, to put it that way. Or you can decide to do a call with our video agent, where you show your passport, you do a quick video call with an agent, a customer service agent. So there are the 2 ways. Then you have to provide us with a valid proof of address, which has to be issued no longer than 3 months ago. Once again, just verifying your identity. So now you've signed up, you've been given your Raisin Bank IBAN. Look, a bit of a pain point for me is that the very low daily transfer limits that the Irish banks put on online users. Of course, 100% that is an anti-fraud thing, and we're acutely aware of that. But it does sometimes delay the transfer process of people, especially people who are transferring significant amounts of money across. But how it works is you use your Raisin Bank IBAN. You either do it in a branch if you want to do a higher amount, or online, like you would send money to anywhere else, really. You put in, for me, Eoghan O'Hara, IBAN, bang, across my Raisin account. That money then appears in your Raisin account, and with the rollout of SEPA Instant later this year, that will obviously become a lot more straightforward for people. And then you choose to open an account with one of our partner banks. So you would say, I've got my 10,000 euro in my account. You can actually order before you fund, which means you can apply to open a savings account before you put the money in. So you can apply to open a savings account with an Italian bank and then transfer the money. And that just speeds up the process. For demand deposit accounts, easy access, you can set up a savings plan with us. So for regular savers, if they want to, you can set up a savings plan to send across maybe whatever it is, 250 quid, 500 quid a month to top up. and also you can withdraw at any time back to your partner bank, or sorry, your own bank. What we do is what we call a nominated account. So you can only choose one account of which you can transfer money to your Raisin account and back from your Raisin account. That's for security reasons. That reduces the possibility of fraud. So you would say I use my whatever bank account most for my day to day. You'd normally use that for your Raisin. You don't have to, but you once it's account with an Irish bank or a bank in the European Union, you can use that for transfers in and out.
Even just hearing you talk through that customer journey there, like you can just hear all the points of verification, checking, validating, safety. So it's all integrated, it's all regulated, it's all supervised.
Exactly.
It's the main message. You also have cool initiatives like your Refer a Friend program. I definitely don't think that's, that should be highlighted as well. It's definitely good.
Should I run through it quickly? If you are a customer who's happy with the Raisin product, which we hope all of our customers are, you can refer a friend using a link. You can send it by WhatsApp, email, whatever way you want, to a friend or family member or whoever. And if that person signs up and opens an account with Raisin with a minimum balance of €5,000 and a minimum term of 6 months, or if it's an easy access account, keeps that money on with Raisin for 6 months, your friend earns €50, but you also earn €50. So that it's a cool initiative.
Absolutely.
Obviously the best way to spread the word is with happy customers. So we're hoping people are using it.
We talked before we started filming, and you also mentioned at the beginning about the how people tend to ask if you can get a Raisin card or a credit card and stuff like that. And we have seen brokers like Trade Republic, Trade 212 roll out their cards in the future. And I'm honestly just curious, specifically for your instant access and deposit partner banks, whether if there's any sort of feasibility in the future of anything like that coming to the market, or just based on how it's set up, it's just not possible.
No, it's not on the roadmap for us at any point. Like if you think about it, we are giving you a gateway to other banks. So if you've got money with an instant access account, to make it very clear, that money is with one of our partner banks. It's not with Raisin, And we encourage people, your Raisin account you're not earning interest on, we encourage people not to keep money in their Raisin account. It should just be a sort of portal from your low earning interest account to a better rate. So no, deposit, like to make it clear to people, I think that's you asked me my point of difference with other players in the market. We are a home for your savings and a portal to get better savings rates. We aren't going to be offering credit products or deposit accounts and things or deposit debit cards. Sorry, I've got deposit on the brain. We aren't going to be offering anything like that.
And for that service of offering a home for savings, you've actually won the Best Savings Provider Award at the Bonkers Awards this year. What did receiving that award mean for you and the team in terms of validation in the Irish market?
Yeah, look, it was brilliant. Obviously, anytime you win an award is great. I haven't won many in my life, but to win that one was fantastic, and it was good because I think it was, like you say, validation that what we're doing is being noticed. Like we have, in my mind, we have transformed the competitive landscape in this country for savings. 29 banks is not an insignificant amount of banks, and the choice we're bringing. So it was nice to be recognised by Bonkers, who are obviously the leading comparison website in the country, who are very aware of all the different players that they acknowledged us as being the leader in that space. So yeah, it was very cool, and yeah, we'll keep on trying to improve and hopefully win some more.
No, I genuinely do believe that Ireland is absolutely one of the most exciting markets to be a part of from a financial innovation perspective, primarily because there's just so much work yet to be done. So final question really, what's the long-term ambition for Raisin, for you and for the company as a whole? What do you want to achieve, and what do you want your offering to be associated with in the minds of Irish customers?
Yeah, well, we really do want to shake up, and I'm not talking about shake up the financial market here. We want to shake up what people are thinking about when they think of savings. We want to become a go-to place for people to, when they have a lump sum on savings, that this is where they go. Raisin is where they go because of the choice, and that they move away from that thing that my savings should be with the bank that I use day to day. We'd love to be part of what you're talking about, a bit of an awakening in financial literacy in the country. Deposits are a safe and easy product to start with when people are making that journey, and we'd love to play our part in that. I'll go back to what I've said numerous times. I honestly firmly believe that your deposits can be a foundation block for a wider financial plan. But if we can do our part to change the behavior of people when they look at their savings in Ireland, and when maybe in 10 years we look at those ECB stats European Central Bank statistics that I mentioned at the start of the call, or you mentioned, that 90% are in current account or demand deposits. If Raisin can play our part to, change that, I think that would be our ambition.
That's a great way to end. Owen, thanks very much for being here.
Cheers, Dan. Always a pleasure.